The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 16th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. Hope everybody out there had a fantastic weekend. Wintertime. Hopefully you stayed warm if you were up in the Northeast, all at snow and sleet. Look, let's go take a look at one of our tools. This is the tool I call Freedom is a Fact of Life. An Oriental sage said that the secret to freedom and happiness is to cease to cherish our opinions. Something to think about. You know, oftentimes we box ourselves into a corner of doing things in a certain manner. Then if things don't go in the direction that we expect, or if someone comes along with a different idea, maybe a different perspective, we get upset. And we become a nuisance to ourselves and all those around us. Look, one way to be free is to break the molds of the old ways of thinking, our rigid ways of doing things. After all, we are our rituals. And each of us, well, we need new ones from time to time. You see, you and I, we are free spirits, and our mind is not bound to anything unless we think it is. Maybe some of you remember the Three Stooges. You know, Curly, Moe, and Larry. Some of you might even remember this specific scene. Larry calls out to Moe and says, I can't see. Moe rushes over and says, why not? Larry would smile and proclaim, because my eyes are closed. And, of course, Moe would bop Larry on the head. Look, as traders, as investors, as fathers, as mothers, as friends, as colleagues, and so on, it's really important to open our eyes to new ideas, to step back and make sure that we are not confining ourselves to only one way of thinking. Patterns, folks, patterns are given to us to serve us, not for us to live for them. Patterns are given to serve us, folks. An old adage says, behold the turtle who makes progress only when he sticks out his neck. Freedom. Freedom is a fact of life, folks, and sometimes you just have to stick your neck out. And look, I would never do that. I would never ask you to do anything that I've not already done. Sticking out my neck, well, is something that I'll be doing once more as I share with subscribers a different way to look at the markets, a different way, because even all of the tools that I believe I've mastered, you know, buying and selling the D point of the A to B equals CD pattern, that beautiful lightning bolt pattern, identifying Gartleyan buy and sell patterns, butterfly patterns as well, volume analysis at swing points, breakdowns, breakouts. Even mastering all of these, they did not answer the question, why do these technical indicators fail? So I set course to try to answer that question. Yes, fail, and I say fail, folks, because we can learn more from failure than we do from success. At least that's my experience. So the question is, what have you failed at today, or yesterday, or the day before? Embrace failure, so long as you take it for the lessons that they can offer to you. So look, this Thursday evening, I'll be sharing with subscribers to my Mastering Probability newsletter service, a system that I've built. We've called it the Rhodes Momentum Indicator, but it's really a strategy versus an indicator. It's like the rudder of the ship that guides us in the direction for making our decision. And the winds of change, folks, you know, they blow upon us, and then they change from time to time. Guess what? The winds changed last night. We're going to take a look at that here momentarily. Now, we've made access to this workshop real easy by offering a 30-day free trial to my newsletter service, Mastering Probability. All the details on the homepage of TFNN.com. If you're a TFNN TFNN member, subscriber. You've probably received an email even over the weekend. Click on it. Go get access to it. There's no obligation, no deposit, no charge your credit card if you're a new subscriber. Access could not be easier. Freedom, folks. It's a fact of life. And on Thursday evening, I'll take you one step closer to freedom when it comes to your trading and investing. Let's go check out these markets out here right now. Dow futures up. Dow futures are up 80 points. They're trading out at, of course, it depends which contract I take a look at out here. Let's just say they're up 80 points. The S&P futures, they're up 9. The NASDAQ composite, they're up about 15, 16 points. Russell 2000 is up as well. King dollar's back 17 ticks. Some movement in the futures market out here. Goldilocks up $1.50. It's trading out at $12.36. Silver up 7 pennies. It's trading at $19.68. Natural gas is, hope you had some stops in place out there. Natural gas back about 8 cents right now. Our call-in number is 877-927-6648. Give us a call, folks. Would love to talk to you, to see how you're doing, and take a look at whatever stock chart or anything you'd like to look at. If we take a quick peek around the globe, the DAX is up 152 points right now, up 1 7/10%. The FTSE off of its lows, it's trading up 63 points. It's up 1 full percentage point. Over in Asia last night, a sea of red out there. The China PMI numbers were out at 9 a.m. If you're watching the futures market, you saw, boom, you saw a move lower. I mean, instantly I saw the Dow futures went from green, slightly green, to down 70 points out there. ES Mini was down as well. In fact, let's go take a look at the Dow futures out here. We'll use that as the lead dog for the moment. What were they doing as they were moving lower last night? Well, they were doing really a multitude. Yeah, multitude. That sounds like a better word. A multitude of things. Number one, they were testing the breakout of that 1,000-point consolidation. Now, that is positive. That is about as positive as you possibly can get, so long as, in fact, it holds. Now, the top of the consolidation pattern, it's somewhere right around, because remember, we're using these as guidelines out here. So the top of it, right around the 15,626-ish mark. The actual low that we got last night was 15,608. So it's certainly within the range of testing that sideways. Now, that's a sideways consolidation pattern that has been in place really since about April of 2013 out here. We saw a breakout of that area. We saw a breakout that took place on November 8th. Price moved up, and guess what? Price just came back and tested the consolidation. When you break a consolidation, oftentimes you come back and you see a test. Well, I thought we saw that test here on November 13th as price pulled back. Well, looks like last night what we got was one more test of that area. Now, the beauty of this test versus the test that took place on November 13th is November 13th didn't create any kind of pattern other than just simply a test out there. Last night, though, whoa, totally different. In fact, get out your Santa Claus hat and get ready to put it on. You can't put it on here just yet, but get ready to put it on, because we may have seen a reversal, because the pattern that formed out here, and I'm a master of these patterns, the pattern that formed out here was a beautiful, and I do mean beautiful, 0.786 Gartley buy pattern. If you take a look at that coming off of the swing point low from November 5th, that price in the Dow futures, 15,456. If you run from that low to the high that was put in here on November 29th, that high coming in at 16,162. If you do a retracement, most of you have got retracement rulers on your technical charting service out there. If you take a look at that retracement, a beautiful 0.786 retracement. So if we take a look at patterns, number one, price came back and it tested a consolidation area. You like to see prices test a consolidation area and stay out of the consolidation, because here's the flip side of this. If this pattern fails, not only would it be a 0.786 Gartley pattern that fails, and we know when those fail, they turn into what? That's right. They're like little caterpillars, that spin a cocoon, and they will turn into butterflies if they fail out here. However, we're not dealing with failure at the moment. Right now, what we're dealing with is a test and a bullish Gartley buy pattern. As we are in the seasonal cycle, as we are in the so-called Santa Claus rally mode out here, and a number of other things. So we've got two patterns that form. Now, beautiful patterns, by the way. Why do I say that? Because not only did you have a 0.786 retracement, you had a 1.618 expansion. Now, the expansion is of the B2C leg. The B2C leg was the low that came in on December 4th, and that's at a price level of 15,785. all the way up to that nice wide-ranging bar that was put in on Jobs Friday, December 6th. The high out there was 16,075. If you take that difference, multiply it times 1.618, subtract it from the high of December 6th out there at 16,075. That'll take it down to the lows that were made. You'll see that's also your 1.618 expansion. So you got beautiful Fibonacci numbers. And now here's the key. Futures are up. What I said, futures are up about 80 points out there, right? Now here's something that you don't even hear this on the. Of course, they're not following stock charts, so I can't fault the folks that are just reading scripts off of screens out there. But what really took place last night, you had the PMI numbers released in China, as I said, about 9 o'clock. In fact, let's go take a look at a 30-minute chart, and then we'll come back here. Let's go take a look at the 30-minute chart here. Let's take a look at the at this chart, and let's take a look at the Dow. Here's the Dow. Let's put this more on a 5-minute chart. Let's just put this on a 5-minute chart out here, and let's come back. So here we are at 9 o'clock, 9:10 last evening. And you talk about the futures moving down. They were up at 15,736, and it only took just moments for futures to get down to 15,700, getting all the way down to the 15,678 range. So if we switch back over and we take a look at what futures we're doing now, you may not have really been watching the futures market. You may not have been trading or anything along those lines. Of course, I was, and I was paying attention to what patterns were being formed as those lows were being put in last night. And that's where we took a look at those Gertley buy patterns. Now, just not in the Dow out here. So if we take a look at, so far, the intersession low that we've seen out here, 15,608 on the continuous contract. And so far, we've seen a high of 15,798. 608, 70. That is a pretty huge move. It's a 200-point move, folks. So when you take a look at futures only being up 79 points right now, take a look at where they fell off the cliff and where we're trading here right now. So not totally out of the woods. Now, this Gertley buy pattern that formed out here, and the Gertley buy pattern that so far today, so far in this session here, has confirmed the minimum objective of any Gertley pattern is a 0.618 retracement of the entire move. Now, by entire move, I'm referring to the A to B equals CD down. That goes from the swing point high of November 29th all the way down to the low that came in on December 16th. Well, folks, your 0.618 retracement level takes you up to about 15,950. That's another, it's about 170 points away from where we're at. But what it has done, it's coming into this 0.382 level, this 15,820 level, with a wide-ranging bar. Now, here's what I expect that we should see out here. We should see some selling coming into the open at about 9:30. Now, we have seen all of the rallies that have taken place here for the last several days. I'd have to go back and take a look at it. It might have been since Tuesday or so. We've seen every rally fail. Question is this rally going to fail? Look, the market on an intraday time frame, it's overbought. We ought to see a pullback to maybe 1772, 1771 inside the ES Mini, inside the March 2014 contract out there. But that, folks, probably sets up a buying opportunity. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not to spend too much time on the Dow futures, but the Dow has been a weak link out here. Weak link from the standpoint, it's traveled in a consolidation range for 4, 5, 6, 7 months, something like that out there. Goes ahead, and it's been a little bit weaker on this pullback that we've had in the market. Certainly much weaker than the NASDAQ 100, NASDAQ composite out there, but forming not only so far today has it come back and tested a consolidation area. Not only has it made the 0.786 Gartley buy pattern in the candle that has formed thus far, a nice bull separating line out there. It is as strong as a 2-day reversal candle as you can get out here, but it also only made the 0.382 retracement. Now, the 0.382 retracement, if you come off of the swing point low from October the 9th out here, that's at 14,648, all the way to the high that was put in at 16,162. Again, it's a continuous contract that we are paying attention to. The actual 0.382 retracement, the number is 15,584. So far, intra-session, what we've seen is a low of 15,608. So let's just cut it a little bit of slack there. Just simply a couple of points. And if this holds now, because of these patterns and only doing a 0.382 retracement, here's what it will do. It'll take out the highs. It'll take out the highs from November 29th out here. It'll set up a move probably to about 16,500. Now, we already have confirmation of a move to 16,500 when the Dow futures broke the consolidation pattern. So when you break a consolidation, your move out of that consolidation is equal to or greater than, the measured move is equal to or greater than the consolidation. Well, the consolidation basically says we move up to about 16,006. A 1 to 1.2728, a B equals CD. That takes you up to 16,506. So we'll cut a little bit of slack there. And this candle so far that has formed, you may not have realized it. You may think that, hey, the futures are up, 80 points, not a big deal out there. Look, folks, the way that it came off of that low that came in. Now, and this is important because if this pattern fails, this will turn into a butterfly pattern. That butterfly pattern here, all we have to do is take a look at the same swing points here, and that expansion says 15,264, which happens to coincide with the 0.618 retracement of this entire move out here. So we are not totally out of the woods, but getting very, very close to getting out of the woods. And I do like, from a bullish standpoint, the way that this market has moved. Let's go to Don in Boulder, Colorado. Don, thanks for calling. Thanks for holding. How are you this morning?
Hey, Steve, I'm fine. I'm calling in for my girlfriend. She's one of your subscribers, and she's a little nervous about being on the phone. So I'm calling in about a stock that you guys were in a long time ago that she stayed in. It's looking good now. It's called ATL. She's interested in what your feelings are on it. She's listening right now.
Oh, okay. Well, great. Hey, well, look. Well, thanks. Thanks. Go ahead.
Her name is Kayleen.
Oh, well, that's great. Well, thanks. Tell Kayleen, happy holidays, Merry Christmas. Thanks for calling in. Happy New Year, all those things. So we've got ATL. Now, this used to be a different name. I can't remember the name that it was originally. So it's trading out at 52 cents out here. I think one of the reasons, let me pull this back as we were taking a look at this. Is this let me see what kind of equity this is. It has a nice high volume high out here on a monthly basis out at the $5 mark. So let's take a look at this on a little bit shorter term time frame, though. Let's see what this thing is doing here on a daily basis and see if we can find some signs of strength. So you've got a nice sign of strength out here that took place on August 13th. Now, in this case here, Don, it's not a ton of volume inside of this equity. I got to go back and take a look at what these are. I think these guys are, is this platinum play? ATL.
Yeah,
Platinum. Okay, so it was a platinum play, and we were probably taking a look at it at the time period when gold and platinum had come a little bit discombobulated out there. So let's take a look at this. So is Kayleen, what is she looking to get out of this? What does she?
She has a lot of shares in a couple different accounts, and she's in at an average price of like 30 cents. And she's
30 cents.
She's been starting to take a little bit off the table, but she's looking up at that 75-cent level and then maybe the dollar level. But there's a lot of resistance, so we just don't know.
Yeah, absolutely. Okay. All right, so we're going to do this. The market is, we're going to go to the market open here in about, we've got to go to the hard break in about 20 seconds or so. And then after the market opens, I'll come back and take a look at the equity. Can you hold on through all that? And then we'll come back and we'll dissect this with you.
Absolutely, Steve.
Oh, perfect. All right. So we're going to go back to Don in Boulder, Colorado, as soon as the market opens. Right now, we've got the Dow futures. They're up 75 points, S&P up 9. And then after that call, we're going to go take a look at the descending price channel inside the ES Mini, and because that's some resistance that we're trading into right now. One of the reasons we should expect a little bit of a pullback to work off this overbought condition on the intraday time frame only. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 136, trading out at 15,891. S&P's up 12. They're trading out at 1787. Russell 2000 up 5 points. Composite up 23. Lead the charge to the upside. We've got AirCap Holdings. AER is a ticker symbol. They're up 36% this morning, up $9 and change out there. I don't know what is behind that move. We'll take a look at it. Google's up $6. Cubis Pharmaceuticals, CBST up 8%. Lumber Liquidators up $4. You've got to the downside here. Crown Castle Inc., CCI, they're down about 2% off $1.90. Adobe Systems off 94 cents. Really, Adobe is a really strong-looking stock chart out there, so that's not a big deal. Let's go back to Don in Boulder, Colorado. We're taking a look at a ticker symbol. Let me pull this back up. ATL is the ticker symbol. It is Altasia, I believe, Atlatsa Resources, and it is a platinum company in the South Africa area. I believe they engage in mining, exploration, development, and platinum in South Africa. Now, Okay, Don, we're going to start off by taking a look at the longer-term time frame first. So this equity here made a nice turn, and it did it during the month of August out here. So it's in a nice little, on the monthly chart here, it's in a nice bullish momentum move out here. Now, what I would recommend is that Kayleen take a look at putting a stop in. Probably, you said she's in at an average cost of about 30 cents, and she's been taking some profits. I would go ahead and have a stop in right around the 36 to 38 cent range on this. That way, she's not in a position where there would be any kind of loss that one could take. That's what the monthly. Now, the good news is the monthly chart here is showing a nice, big, strong momentum move. And I'm using part of the Rhodes momentum indicator strategy system out here. Now, on a weekly chart, the weekly chart gave you a real nice buy signal. That was on the July 19th time frame out here. And that says, your stop might want to be around the 48-ish cents. I wouldn't put it down that low, but probably around 40 to 42, 43 cents, something like that out here. But it has got a lot of buying pressure. So that itself looks pretty good on the weekly. So take a look at the daily chart. The daily chart also showing, some nice signs of strength out here. Now, she's interested in she's concerned about the 75-cent area, I think is what you had mentioned. Is that correct?
Yeah, we were just looking at the volume up there. It looked like it would be tough to break through there, and how much she should take off the table if it was to get there, kind of thing.
Yeah, the way that I would do this because of the momentum that this has in it at the present time. A normal retracement here from its last swing point high to low ought to take into that 72-cent range. So, as far as volume, because there's not a ton of liquidity in the stock, meaning it could trade 80,000 shares in a day, and that would be pretty much normal out here. One way to take a look at doing this would be to have free shares. So, because you said she's got quite a few shares. So one way to take a look at trading this is it gets up into that 75-ish cent area, that maybe the stop that she would have in place, she would put a stop in place and the number of shares that would be covered by that stop would go ahead and get her to where the remaining shares she would hold would all be free, right there. And that way you're in a no risk trade. So it's one way to take a look at it, and then you could go ahead and let this thing run over time. Because when we were looking at this equity, when we were looking at this trade, it was the idea of being able to be a longer term type trade out there, and having free shares is always a nice way to do it. So that's one thing to consider doing. It would be normal at this stage here with the momentum that's behind the equity for it to move up to the $1.09 area. And I think $1 was what you also mentioned as a potential area that you were targeting from a resistance standpoint. Is that correct?
Yep, those were the two numbers.
Yeah. So I would say that's how I would throw that out there as ideas for ways to take a look at how to trade this equity. Actually, I guess I had the weekly chart up on my screen.
Yeah, she's religious about her stops. She really follows you closely, and
that's good.
Since she's been doing that, she's been much more successful. So
that's good. So I think on this one here, momentum looks good at this stage here. Like it's a 50-cent stock, so it can be pushed around very easily. And what I would do is I would just sit down and take a look. You guys seem like you have a really good handle on it, so that's wonderful. What I would do is just sit down and take a look at the strategy that you are most comfortable with, because you've got some options here. And if you've got an average cost in the 30-cent range, you're at 50 cents here right now. The question becomes just how long-term did you want to try to hold on to this type of an equity out here? So
right.
It's either take all your profits at around 72 cents and keep a stop in, and that's a heck of a nice return. So there's nothing wrong with that. It is if you have a deeper belief or deeper conviction in it, it's take all your principal off the table, or all of your principal off the table plus some profits. Just really depends on what you've got from a share standpoint. But, don't do anything to let this thing get into a negative position.
Right.
That's my recommendation. But
overall, it looks strong to you, though.
Right now, it's turned the corner, and that's what you needed to see on this equity here was for it to turn the corner. And if you take a look at anything that you trade, again, because this was a kind of a longer term holding, you want to say, okay, on the monthly chart, what is it doing? And from a momentum standpoint, this thing finally turned the corner here. Really, I'd have to say it was during September of this past year. Otherwise, this thing has been in a nasty downtrend here. But that trend has changed. And I can show you other stocks like this where the trends have changed. Now, bigger holding stocks like Hewlett-Packard or Netflix that have done something similar. If I put NFLX on my screen, which got hammered, which had volume all the way down off of its highs out here. Let me see if I can pull this back. Yeah, off of its highs, it had a nice big, a really nice what I call price relative strength divergence pattern that occurred right up at the highs. It was followed up back in August of 2011 with a bearish engulfing candle, came all the way down to its lows. This thing on a monthly basis gave you a nice confirmation back in January of this year. Even if you bought at the end of January at 160, it's trading at 283 right now. So this has, so the equity that you're looking at from a monthly standpoint and a weekly standpoint, it's got the type of momentum that you want to see in it. So at this stage, all looks well, and that's how I would take a look at trading it. Those, come up with a strategy that you guys are comfortable with.
All right, thank you, Steve.
Hey, thanks so much for calling. Happy holidays, and tell Kayleen I said hello.
I will. Same to you.
All righty, take care. Right now, folks, you got to the upside. Google's up $4. AeroCap is up 9. And what I did say I wanted to do is I wanted to go back and take a look at the shorter-term chart out here. I want to take a look at the intraday chart. We're going to look at the ES Mini here. We're going to look at the S&P futures as soon as I can find where I have that one listed. Here we go. Okay, well, so here's a breakout. So the downtrend channel that the ES Mini has been traveling in, which really began, you could take a look at the highs out here right around December the 10th. Now, it's a 30-minute chart that we're looking at, so I'm not going back to the high that was put in on November 29th. Instead, what we're looking for is the price channel that price has currently been traveling in off of the highs out here. So you'd come back and you could use as your touch point in order to identify those areas. You could use as your touch point the open from the trading session at 7:30 in the morning, and that open was out at 18:10.75. Then you've got a series of opens and or closes, a little cluster that took place around the evening time period, 7, 8, 9, 10 o'clock at night during December 10th. Price comes back into this area here around 8:30 in the morning or so on December 11th. So that really sets up your resistance line from your channel. Now, now price has moved into that extreme over bought condition, but to the extent that it can now. So let's first come back to this rising price channel. Hopefully you're following us on TigerTV. If you're listening on your radio, your mobile device at TFNN.mobi, we absolutely appreciate that. You can always catch the archive of this show on Channel 9. So now we're seeing here, as we were coming on to the air this morning, 7:38, 9 o'clock, what we can see is price ran right into that resistance area while it was in the overbought condition. My expectation, which oftentimes are not met, but my expectation at that stage, knowing that we were running into some overhead resistance and knowing that it was oversold using a 14-period relative strength indicator out here, was that we would go ahead and we would see some kind of a pullback, some kind of retracement. Now, where I was gauging at that stage was 1772. And 1772, would have brought us down below the 0.382 retracement level, somewhere between the 0.618 and 0.382 retracement of that move at that stage. But right now we're not seeing this. What we are seeing is we're seeing a breakout of this descending price channel. So at any point in time during the day, if we see some of the sellers move into the equity, you got to figure that if you were short the markets at this stage and you came into this morning's open, and of course you knew that the ES Mini thus far, not that, is really up off of the low of 1760 and you're at 1791. So that, folks, that's a 31-point move out here. Now, again, this is the December contract that I'm looking at, but what we're really seeing here is not that the S&P 500 is up 16 points. You have to realize that it pushed down pretty hard very quickly last night, and China and Asia were down all evening long out there. So when you take a look at today's move thus far, it's a 30-point move is what we have seen inside the markets. That's why it's so important to be able to, look, you don't have to trade the futures, but you certainly need and you want to have access to the futures contracts so that you can see what's going on. Because as the markets were moving down last night, when you've liked to have known what it was actually doing, that it was forming, that it was testing a consolidation area, that it was forming a Gartley buy pattern. And it wasn't doing it just on one index, it was doing it on multiple indexes. And then you've got this descending price channel here. So we're now seeing a real break because the descending price channel here, in essence, was tested. It was tested during this time period. Look, I'm not saying that there's not going to be some. So there should have been natural short covering, which is pushing the market up as well. But look, I think that this break is real. I've been talking about this, well, really since last Thursday evening, when I did Tom's show, when I was saying, look, folks, the Euro-Japanese yen, in fact, let's go take a look at it. I know some of you out there are saying, hey, Steve, you haven't looked at the Euro-Japanese yen. I hear you. I feel your pain. And if we take a look at the Euro-Japanese yen here right now, you can see kind of a flat session. But what's more important about this is that there's been no pullback inside the Euro-Japanese yen. So we've seen our markets pull back, I don't know what, the Dow, 500 points or so, something like that. And the Euro-Japanese yen hasn't budged. Folks, this is the barometer of the direction of where the market is going. And as I've mentioned in the past, when you see divergence here, what's going to win always is going to be the currency pair. Because the currency pair, I don't know how many times it is larger than the equity markets. Larry's given us that statistic before. Maybe somebody in the den knows. I don't know. It's like 400 times larger. It's 4,000 times larger. It's not like it's just larger. It's like it's hugely larger. And this currency pair, for whatever reason, you know, and that's all. We really don't need to know the fundamentals behind it. But for whatever reason, this currency pair is the one that really tracks the U.S. market, the stock markets, not necessarily the commodity market or anything, but the stock market's better than anything else. And this one is the one that has had the divergence that's saying, hey, Santa is going to arrive, that there is going to be a rally. Now, we're not there just yet. You know, right now on the daily charts, the ES Mini, it's running into the continuous contract. It's running into some overhead resistance. But if the ES Mini today gets above, closes above 1787, 1788, the higher the better out there, then the change in trend will have taken place out there. At least one of the signals of the change in trend will have taken place out there. And it says, hey, if you're short, be really careful out here because you've got just beautiful patterns. Doesn't get any more beautiful than, see, these patterns here that I was showing you inside the Dow. Let's go take a look at it. Let's take a look at the Dow futures versus the Dow. Now that is that's a strong candle, folks, inside the Dow futures. No question about it. And that is a trampoline effect coming off of the consolidation out here. Now, you can see you've got the 0.786 Gartley buy pattern that formed inside of the Dow futures. But if we go take a look at the Dow itself, we're not going to see that same pattern out here. Let's put up the daily chart. I didn't get a chance to get all the way down to form that pattern out here. It came close. It didn't complete the 1-to-1 A to B equals CD. That would have taken down to 15,675. That's because all the work was being done overnight out here. But if we do take a look at coming off that same swing point, which is November 5th, out here, you know, you're going to see this kind of a pattern. You're going to say, you're going to be like, what the heck is 707? Not that it's not a, jetliner out there. Or what's 1.372? Yeah, 3.2. I guess that's close to 1.272. But you will have missed what the real message of the market was, and that's why understanding, having access to the futures markets will help you understand what is going on, what patterns are being set up, both from a failure as well as from a success standpoint. Right now, Dow futures, forget about the futures, the Dow is up 161. Of course, we know the market's up much, much more than that after the push down last night. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 164, S&P's up 15, Composite's up 39 points, and let's take a look at a little bit longer-term time frame inside the Dow futures. We just simply spent a ton of time here, but why not? And since we're taking a look at the different patterns on different time frames that are out here, so now we're taking a look at a 120-minute chart here for the Dow. Now, on the 120-minute chart from the Dow, we're coming off of the lows back here in the time frame of October the 9th. So this happens to be the December contract that we're taking a look at. So just to keep the same patterns in place. So coming off of lows there, you saw a nice little rising price channel that had formed. That rising price channel inside the Dow was broken during the trading session here at about 1:30 in the afternoon on November 29th. So that was the day we were coming back from Thanksgiving. At 11:30 in the morning, you saw a nice move up. And then at the end of the session, you saw a big little sell-off there. Well, if we take a look at the high, if you're using the base of the body, now the bodies are truly the essence of price. That means you would use the close at the 11:30 session. That close was 16,133 out here. Now my next touch point that I used was right past this little doji candle that took place at 1:30 in the morning on December 9th. So I'm really using the open of the body at 3:30. Again, it's a 120-minute chart that we're using at the open of the body at 3:30 in the morning on December 9th. And what we can see here is that really cements a pretty nice descending price channel top. And if we take a look at coming off of the swing point here from about 1:30 in the afternoon on December 9th all the way down to the low that was put in last night at, 9:30 or so in the evening. If you go from that high to that low, the 0.786 retracement level takes us to about 15,965. You're at 15,926. What's going to happen here is as price moves up into that area, it's going to run into the top of that descending price channel. This is where we're going to really understand whether or not this is a counter trend move in a market that on the daily charts thus far, still is not over its resistance points where it needs to get up over. So we'll find out whether this is just one large counter trend move in the markets. And what will help us to determine that is if we see a successful break of this little descending price channel. So that price level ought to come in somewhere around 15.9 something. Yeah, well, you're at 15.926 right now. So, boy, that's really a stretch, huh? Somewhere around the 15.960-ish type mark out here. So we'll pay attention during the next hour out there. And I do believe Basil is going to make it back for his 11 a.m. show here this morning. I don't know that it's a coincidence or anything, but if we do take a look at the low that was put in here at 11:30, at 11:30 here last evening. When the low was put in on the Dow futures, it happened to make a trough D out there. So maybe it was doing that just simply in honor of Basil. So I believe at this stage he's going to be back with us at 11 a.m. So bravo for that. Everybody looking forward to that. So what are we going to be paying attention to today? I think we've outlined the prices at least inside the Dow. We'll take a look at the S&P, the NASDAQ, and so forth in the next hour. As far as the New York Stock Exchange here right now, it's got nice market breadth, 1,530 net advancing issues. It needs a total of 2,064 today, so it's going to need the rest of them to really get on board. But if you get over 2,064 net advancing issues today, you'll have green lights everywhere with regard, well, I won't say everywhere. You'll certainly have it inside the New York Stock Exchange, which also has been weak. Just as the Dow. So, folks, if you're off to start your Monday, have a great Monday. And always remember, folks, you've got amazing power within yourself. That power is so strong, it's going to take you over to the homepage at TFNN.com. Sign up for Mastering Probability. You'll get access to my workshop this coming Thursday evening. It's going to be free to get in if you're a new subscriber. Have a great Monday, folks. Look forward to seeing you soon. I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.